What's up, guys? Welcome to another daily recap of the S&P 500. Just taking a look at the daily chart today. We got a very big red candle, and this is actually a complete reversal from what I said yesterday. Yesterday, I said, hey, we're good to trade within this channel. We're good to trade within this channel for the next couple days, couple weeks before it makes its next leg up, right? And the channel was this trading channel right here, because we ended up well at it. We were pretty much right at the edge right here, ready just for a quick layup into new highs. But what ended up happening today is if we look at what we opened up today, we ended up starting right here at this area, and what ended up transpiring the rest of the day is just that we ran up and to test yesterday's close, and then we ended up getting rejected very hard the rest of the day. And as I was talking about, like, these are your pivots right here, the 386 and then as well the 384. If you break this, like, you're selling off and you're officially no longer trading within this window right here. Sorry for my very crude drawing. And we take a look at the daily chart, at the minute chart. See what happens is we see that at the start of the trading day, you pretty much have a quick run up to test the open of yesterday. I mean the close of yesterday, and then you see a quick sell off, right? And then you see a quick sell off, get support at the 389.35 range, quick bounce, sell off all the way until the channel, right? This pink line is, if you go back to the daily, this pink line right here is the floor of the channel right here. So I was actually I did one trade on the SPY today, and it was actually the trade on the bounce at the pink line. Um, so I didn't take this one actually, because I saw this bottom, and then I saw the rebound away, and then I saw it come down a second time. So I said, hey, you know what? This might be support because it acted as support once, and it's also the low of the day. So there's a good chance it bounces here, right? So what ended up happening is I ended up taking the trade. As soon as I saw it spike through, I took the trade, and about 5 minutes later, I pretty much just got out of the trade because I realized that once it broke through, I ended up selling it like around here. Once I saw that the 387 was, it was around 387.30, 387.20. Once I saw that it pretty much gave up this number, I pretty much just got out. I only ended up losing about 7 cents per contract. So I ended up taking about 20 contracts on this play. So I ended up losing about 140, which isn't bad compared to my portfolio size. But the point I wanted to take this bounce here and take it back to this purple line. Sell off the majority for a scalp. That would have paid maybe like around 20 to 30 cents, right? Because we were in an uptrend from the day prior. It did look like we were ready to test new highs, right? But since we ended up getting a quick failure, you have to lose quick, you have to lose small and get out. Because if I would have bag held and stayed on with hopium, the rest of the day I would have pretty much just gotten killed. And so what ended up happening was, the rest of the day, it ended up selling off quickly into this support. You got a quick bounce, you got to bounce off the 20, back down, consolidation, and then, a fast sell through onto the next level. And when this came up, you can pretty much see, red candle after red candle after red candle. And then they managed to catch a bottom around 381.77. We can go ahead and add a line here because this is probably going to be significant in the days coming. And then we ended up seeing a bounce all the way up to this level. If it would have recaptured this line and closed above this, we would still be good, right? But the fact that we didn't, and we got a very strong rejection, it puts us in the very bearish camp. And that pretty much opens the door up for a major correction in the market for its next leg down. And what's going to end up happening is, um, the SPY itself is made up of a lot of tech stocks. If you look, for example, at Amazon, if you look at the daily chart, Amazon is trading right at the 200 EMA, if it doesn't manage to bounce from here, this is going to drag down the SPY with it, right? Tesla again as well. It managed to catch support off the 100 moving average, but you can expect it to run down to test 655 next, which is about the highs of these peak, as well as the 50. I'm sorry, the 100 EMA. And if that fails, you're gonna get even more acceleration to the downside, and that's gonna cause the SPY to drag down even more, right? The big player Apple, it closed below its 100 EMA. You can expect this to run now to around the 112 area, and this is also going to push the SPY with it. And so one thing you should know is that the SPY, its biggest contributors is going to be Apple, Microsoft, Google, Facebook, Amazon, and these tickers, they lead the SPY, right? So if these tickers go low, they're going to push the SPY with it, and if the SPY goes lower, it's going to push the rest of the market with it. So that's the only trade I ended up taking today. Like I said, I got in, I got out quick. I was wrong. If I would have been right, I ended up risking only about, if when I ended up taking this trade the second time, 3,875. I'm sorry, I took it up here. I only ended up taking about a 30-cent loss because I ended up getting out around here. But I was, ready to win 67 cents. I was ready to win about 70 cents at the minimum. Cash out some gains and let the rest run. But I didn't. So it was it had the right idea, but it didn't go my way, and that's okay. And so one last thing is yesterday I got into IPOE. One reason, so I ended up closing my IPOE position at 19.99. I ended up closing around this candle. It was like around 19.99, so it was maybe around this candle. And one reason I ended up doing is because at this point, around 7:30, the whole market had already came down to the support levels, and I was saying inside my head, hey, you know what? Like if that doesn't hold, if the market breaks through, this is going to sell off because IPOE was pretty much trading, around this range, and as soon as this low of day gave out, you pretty much saw a quick acceleration to the downside. So I played it safe. I took my winnings from yesterday, and lo and behold, we ended up getting that breakthrough to the downside on the S&P 500, and I'm glad I got out because that went from 1999 all the way down to the 18s, and so as of right now, like we haven't officially hit a downtrend. Um, and so as you can see, the 100, the 50 moving average also played a key support. You could have taken this for a bounce, but as of right now, I don't think I'm gonna be taking bounces. I'm gonna stay cash with a lot of my positions for now. So for tomorrow, it pretty much depends where we open. Again, if we want to continue our our next like higher, we have to clear above the 384.74 and then the 386.10, so we can keep trading within this channel, but within this area. But it's not looking very probable because this candle pretty much overtook almost the high and the low of this candle, and it's what you call an engulfing candle, and this engulfing candle pretty much means that this candle is a lot more significant than this candle. So as of right now, we have a bearish tone going on, and be safe. Look to go on the short side if you can, and then use your levels. And then once again, just to reiterate, why was this level right here important? Like, why did it make the peak at the bottom of the day? Because if you zoom out a little bit, this 381 level, 78, was actually the low of this day right here, which was very close to the high of this day. So it's pretty much like the zone. And that's how you know that the market makers are looking at certain levels. The low, for example, today was, the high of this day, also very close to the high of this day and the close of this. So again, it's a zone. These numbers, like, they're predetermined by the market makers, and take your trades at those levels and try to figure out which trades have high probability. Tomorrow, when it hits 380 at the first go, you can take a quick scalp to go long, because this should be support on the first try. If this sells out, In fact, I would even take this trade all the way to the 50 moving average EMA, risk about 50 cents, and then look to gain maybe about $2 at least to the 381 level. Um, so, just do your calculations. 50 cents for $1.50 rewards 3 to 1 is very favorable, right? That's how you want to be trading. That's how you want to be thinking. Because sometimes you might be wrong, and when you're wrong, you lose 7, 10 cents per contract. But when you're right, you can win 30 cents, 40 cents, 50 cents. I've had days where um, I lost 5 cents on the trade and lost 7 cents, and then on the trade that you were successful, you ended up losing 25 cents. And one good trade that gives you 50 100% can make up for 3 4 trades that you end up losing 10 15%. So be calculated, be smart with your money, and follow the trend. So that's it for today. Your next pivot is going to be this line right here, the 380 level. This line should be up a little bit more, and then this is going to be your resistance at the first go, 384. Below, and we're going to keep selling off, above, and we're going to be, we might be good to keep traveling for the next few days, coming weeks. But that's it for today. Stay safe. If you have any questions or comments, just drop them below, and we'll keep in touch.